promised, the top management of Mahindra Lifespace developers here with us, Arvind Subramanian, the MD and CEO. Thank you so much for joining us live today on the show. You know, what we have seen, and I'll ask my producer to also show up the stock chart of not just today, but let's look at the last 6 months to 1 year. It is a year which has been marked by the recovery in the real estate market that began from Bengaluru and then, of course, went elsewhere as well. Now there's pressure on the wallet, interest rates are going up. Nevertheless, this is a company that has given a target of nearly 2,500 crore rupees of annual sales by FY25. Good morning, Mr. Subramanian. Should we begin with the kind of sales Mahindra Lifespace is seeing? This is a year where we've seen, and quarter after quarter, where developers are coming on our channel and saying it's been the best quarter. This quarter has been the best sales for us. Is it the same for you?
Good morning, and may there be many more such quarters ahead of us. Indeed, it's been a good 2 quarters. The first half of this year, we've done as much sales as we've done in the entire last year, and that itself was a sharp growth over the previous financial year. So we've set ourselves up quite well for strong growth. As you mentioned in the introduction, we have set an interim milestone where we want to get to 2,500 crores of residential sales and 500 crores of industrial leasing by 2025. And I'm happy to say we're well on course to that.
Okay, so you're well on course for hitting 2,500 crore rupees annualized sales by FY25. But can we also ask you this one question, Arvind Subramanian, that we've seen rate hikes, right? If you look at it, the effective rate hike since the pandemic is more than 230 basis points. We just had a 35 basis point rate hike earlier this week. So home loans are getting more expensive. There is pressure on wallet because we've also had inflation thanks to, for whatever reasons, we've had inflation as well. We've had layoffs in the startup space, and these were the people who were thought to be very flashy and the ones that started the real estate boom. None of this is impacting?
Well, I wouldn't say none of it is impacting. There is certainly a correlation. But we are finding that correlation has weakened over time. If one were to ask the same question or look at the same picture maybe 5 or 10 years back, it was a very strong correlation with a couple of quarters lag. When interest rates would go up, real estate buying would get subdued and vice versa. The reason why I feel the correlation is weakening is 2 or 3 factors. Firstly, the market has moved quite markedly towards end users who want to buy the apartment to either live in it or hold it for a long term. Therefore, they're not necessarily timing their purchase based on interest rates. These are often very considered, deeply thought through purchase decisions. The entire family plans for it for several months, if not years, to save that down payment kitty that they're planning to put down. And therefore, they're neither overtly encouraged nor discouraged if the interest rate moves down or up, respectively. Furthermore, all mortgages in India, as we know, are 30-year floating rate mortgages. So in any case, consumers and families would be exposed to interest rate cycles over that period of time, and they understand that. So for all those reasons, I feel the impact of interest rates on home buying has weakened over the years.
Mr. Subramanian, good morning. Now, given that the company saw sales bookings rise by over 30% in Q2, you're aiming for a sales booking figure of 2,500 crores by FY25. Walk us through what your development plans are in order to achieve this target.
So we've set a very brisk but a very well-planned growth path towards that first milestone of 2,500 crores. We were, just for context, doing about 700 crores 2 years back. So 700 went to 1,000 last year. We've done 1,000 in the first half this year, so we'll certainly end up higher than with a very strong growth. The way we think about it is we want to be buying roughly 2,000 to 2,500 crores worth of gross development value of new land each year, and bring that to market within a year from acquiring the land. And we've been quite successful in doing that. I see on the screen you've cited a couple of projects. So Kanakpura in Bangalore, we acquired it second half or early last year, and were able to launch it this year. It's done very well. We've actually brought the second phase forward and launched that a few weeks back as well. Similarly, there was a land parcel in Pimpri in Pune that we acquired in April this year. We've already launched it 2 weeks back. So that is the kind of pace we would like to set. We do clean land acquisitions, we plan well, and then want to execute with speed.
What's the sales potential that you, or rather visibility that you have for the second half of the fiscal?
Yes, so as I said, first half has been extremely good. Quarter three, we've done a couple of new phase launches as well as new project launches. So quarter three is also shaping up well. And we expect to end the year on a very strong note. So we will have a very significant growth over last year's sales as well.
Sure. And I wanted to understand a little bit more about this joint venture that you have with Actis. What exactly is the plan and how is this JV going to develop?
Well, it's a very exciting new joint venture that we've announced. This is to develop specialized real estate for the industrial and logistics segments. It's a very nice adjacency to our existing industrial parks business, where we essentially do a landed business, where we do long lease of land to clients who then build their factories or facilities on that land, and we manage the infrastructure and operations of the industrial park. This then takes the logical next step, this joint venture, where not only are we providing the land, but we are also building out the factory facility or the warehouse facility for the client. There's an increasing demand we're seeing from both multinational as well as Indian clients who are saying, I don't want to get into this business of land and building and things like that. I want to focus on my operations. So why don't you as a developer build it out for me? I'm happy to lock in with a long-term lease with escalations. And this is an attractive space that has been garnering a lot of investment over the past 2 years. So it made sense for us to address this, and we've done it through a joint venture with Actis, who's been an old partner of ours in our residential business. So we have a long relationship of trust. We will be a minority partner in this venture, and it will be an independently board-managed company.
Okay, so that's as far as Actis goes, and the plans that you have for developing a platform, and that's for industrial land primarily. Mr. Subramanian, can I ask you one question, which is that are you looking at a lot of geographical diversification? Bangalore and Pune, you've already been able to launch projects ahead of time. You got approvals faster, but if this is really, one of the best times for the property markets, and you're also seeing people take money off the stock markets, taking the cash off and investing, it's something we've been talking about as well. Are you going to look at new geographies?
Yeah, that's a great question. It keeps coming up, and both from inquiries that we get from landowners, but also internal conversations and conversations with the board. We are very clear that we'd rather go deep in few markets than spread ourselves thin over many markets. Given the size we are, I think the 3 cities we've chosen for our residential business, which is Mumbai, Pune, and Bangalore, would serve us well to get to that first milestone of 2,500 crores. As we grow beyond that to the next milestone of 5,000 or 10,000 crores, we would certainly need to add perhaps an NCR, maybe even a Hyderabad to that. But we feel there's a lot of merit in staying focused, both from a management perspective, but also from an operations perspective. Regulations are very different in each city. The distribution channel is quite local. Customers need to see multiple projects from a developer to build confidence in the developer. And most importantly, which is not talked about often enough, talent needs to see a pipeline of growth in that city. And one of the reasons we've been able to demonstrate the performance we've been able to demonstrate is the fact that we've attracted great talent.
So then, given that, are you saying you'll just stick to where you are, or the areas that you're already familiar with, that's where you'll expand?
So for the next 3 years, I can say quite unequivocally that Mumbai, Pune, and Bangalore would be the center of gravity of our business. We don't intend to go beyond that from a residential business perspective. On the industrial side, we are present in Chennai and Jaipur, as well as Ahmedabad. We will be doing more work in Pune, and through the Actis joint venture, we'll have a wider geographic footprint on the industrial side.
You were here, I'm from Delhi, you were here, like in the Dwarka Expressway, in North, in the national capital. Does it mean Mahindra Lifespace doesn't want to do business, at least for now, in the NCR? We know that the trust deficit, for whatever reason, between home buyers and developers started from a lot from the NCR.
You're right, and it's very tempting to continue to commit to NCR. We've had a good run there. We have a project currently under development on Golf Course Extension in Gurgaon, which has done extremely well. It's widely regarded as one of the most successful projects in that area. But as I said, it's just a here and now decision. Given the size we are, 1,000 crores growing to 2,500 crores, it just doesn't make sense to be in too many cities.
Thanks so much, Mr. Subramanian, for joining in and giving us a view on how things are shaping up for the company.